Hello, welcome from Trend Signal for our review of the data and events of the week beginning the 11th of July. US and now Far East markets in buoyant mood on Monday morning. Very strong non-farm payroll data last Friday. Partly expected, I guess, after such a weird June reading, but that should probably help calm the nerves at the FOMC, the rate-setting committee of the Federal Reserve. Although I think the market still doesn't expect a rate rise this year, although not surprisingly, the probability has improved a little bit. Market data has the probability of a rate hike in December at 22%, which is up from about 12% before the data. Not just non-farm payroll influence on Monday morning, but there are a number of positive events over the weekend. The Australian election has finally been resolved in favour of the incumbent Malcolm Turnbull's Liberal National Coalition. They've claimed victory only 8 days after they went to the polls, so all a bit weird really, but the ASX gained 1.7% on the day. In Japan as well, another election, the Prime Minister Shinzo Abe won a resounding victory in elections in the upper house at the weekend, so he's well in control there. And also strong machine orders, my notes here, helped propel the Nikkei 4% higher. So I think one of its biggest gains, looking at the chart from mid-April. In fact, all the markets on Monday morning were posting good gains. Hang Seng up 1.5%. In fact, I think the only market in the red is the Indonesian market, which has reopened after celebrations at the end of Ramadan. So I believe that isn't such a fall as what was expected. So all in all, markets doing very well. Markets last week struggled a little bit. The FTSE was sort of only up a few points. The Dow and the S&P nudging towards record highs. A very good move on Friday. On the week, the Dow was up 197, the S&P is up 27, but that was all largely thanks to the very positive reaction to the non-farm payroll data on Friday. The DAX continues to struggle with a strongish euro, certainly against sterling. The Nikkei, well, struggling with a very strong yen, the dollar-yen rate falling another 277 ticks, or 2.67%. That's the number of yen to the dollar falling, so that's the yen strengthening. Gold, well, not surprisingly, gold continues to reflect the state of uncertainty in global markets post-Brexit, up another $22 last week. Oil, but that stumbled, down $4 on UK oil, weakening after some disappointing US inventory numbers last week, and falling from that sort of pivotal $50 level. So inflationary pressures might start to ease somewhat. Okay, let's have a look at the calendar for this week. Currency volatility persists, obviously, mainly in sterling pairs, although Brexit angst continues, and there is a feeling that it is starting to wane a little bit. But let's just have a look at what the focus will be this week. It really is two central bank meetings that we're going to be looking at. Normally, you'd expect no change from the central banks as rates are pretty close to rock bottom anyway. So with the Bank of Canada on Tuesday, we're not expecting any change here from the current rate of 0.5%. But not so with our own Bank of England's MPC that meet on Thursday. We're expecting some action there. Mark Carney, the Governor of the Bank of England, made it very clear that there's clear evidence that the economy is slowing sharply. And in fact, I think there's data come out on Monday that suggests the economy was slowing before Brexit as well. Bond markets and money markets are all factoring in a rate cut of sorts, and eventually to zero, in fact. I think expectations, certainly looking at the consensus here, looking for a cut from 0.5% to 0.25%, but there is a feeling that the Bank of England could take very strong immediate action, and maybe a cut to zero would be preferred this month. Not suggesting that would leave them with nothing that they could do in August, but there's a feeling that if they cut by 0.5% this month, they could then start another round of QE in August. Either way, the markets expect action of some sorts this Thursday. Gilts, well, pressure on yields really to go lower. A lot of it's already discounted what we expect the Bank of England to do. Equities, well, I think the only game in town really, further supported. UK PLC still uncertain, although the 250 on Monday morning certainly now back towards its sort of highs post-Brexit. So not a bad performance at all. Let's have a look at the rest of the data this week, and it's really, we then have to jump to Thursday after the MPC announcements. We've got the first of the inflationary readings. In fact, it's the producer price index in the States. That's the cost of goods and services going into production. And then we get the actual consumer price index out on Friday at 1:30. There is absolutely no pressure, and with a pullback in crude prices over the last week, I think that will be less important. We also have retail sales on Friday, and I think in light of the very strong showing of the non-farm payroll data, although following on from a very weird reading in June, I think the market will be keen to see the strength of any data going forward, and I think the feeling is that certainly for now that the payroll data is still not strong enough to get another rate hike this year. And then finally, we've got the preliminary data from the University of Michigan Consumer Sentiment. The US consumer is very buoyant indeed. Let's see whether that can be maintained over the summer months. That's it. All eyes, all attention on the MPC. What effect could it have on sterling as volatility has sort of calmed down a little bit, but is it the quiet before the storm? We'll see on Thursday. Thanks very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.